Through the 70s and 80s, there was a gold investment understanding of the way gold should act in certain conditions, whether it be terrorist attacks or crisis in the world. In recent years, one of the things we've been noting in our reports is the negative yielding bonds on the planet Earth. The correlation between the negative yielding bonds and gold has been extremely high. So in other words, when the amount of negative yielding bonds is up around 11 trillion or 12 or maybe even 13 trillion, as we saw in mid to late 2016 around the Brexit, gold is at the highs. And as the amount of negative yielding bonds moves down, because say interest rates start to go up, as we saw in 2018 last year, gold suffers. What's going on here? Like the traditional metrics of gold? So I know you've got a strong view on gold, but it feels like the traditional metrics have been really kind of taken to the side for the last couple of years.
I will defer to the gold experts on the macro of it, but in its basic form, I'll start with recently and then move and go backwards and then come back to the present. I think Bitcoin and cryptocurrencies, whatever your view on them is, sucked a lot of the demand for gold out, because one way people view gold is a safe haven, right? It's a way to, to your point about how the central banks are acting, what is the value of a dollar? When you start to ask those type of philosophical questions, normally you would go to gold. Well, a lot of that was replaced, I feel, over the last several years, and now you're seeing the destruction of that value over time, would go into gold. And so that aspect of it disappeared. So to your point,
that was like about 400 or 500 billion has come out of crypto.
Yeah, I don't know the exact how much was lost when you count the ICOs that were allowed to exist, but yes, it's in the hundreds of billions of dollars.
Hundreds of billions.
Maybe in the world of gold, that's not a lot, but on the margin, it's enough to self-fulfill. I don't need to be in gold because it's not working when it should. So I think it created this false sense of this gold never working. And I actually think it's really interesting, and I know as we sit here today, it's had a nice run. It's had a nice sell-off here, obviously, as the Fed's going back to equilibrium, I would say. So gold works now to me on the other side of Goldilocks. So ironically, if it's Goldilocks, gold's not going to do great, because if you have a balance of what the Fed is doing. But anytime we jump ahead and things heat up again, within the economy, you may say, oh, there could be inflation now because the Fed didn't do enough. Oh, historically, I would own gold under an inflationary environment, right? Or the opposite. If the Fed starts raising rates to catch it, they're going to say, well, things are going to slow down dramatically, and then the Fed's going to end up cutting, so I'm going to buy. So you have this period of time where right now, in this moment, people are, all right, gold's had a nice run. I didn't need to, the Fed looks like now that, okay, they stopped for a month, and now they're going to come back and raise again potentially, because, and you've pointed that out, and your credit conditions have loosened again. That's what it's trading off of now, is gold is the complete proxy. Forget about the global macro for a second. Now, there are countries that have reserves. Some had been forced to sell. I don't know if Turkey or some have been forced to sell. Venezuela, Argentina have been forced. You would know better than I would on that. But there are supply-demand equations going on always at the margin on gold. But I think gold, to me, is a must-own in some percentage of your portfolio, because I can't think of a scenario, geopolitical, macro risk, where it won't work over a longer period of time. Could it go to 1,000? Sure, it can go to 1,000, and that would be horrible to go down another 20%. But I think I think you have to own it. There's too many uncertainties in the marketplace, and why I don't believe we're going to overshoot on the inflationary side. I don't see that just being an issue for a long, long period of time. I think it'll be a slowdown, and I think the Fed will stop, and I think the Fed could potentially cut again. And so we've already seen QE. They halted it, right? Went from 4.5 trillion to just over 4 trillion. All of a sudden, we got to stop.
So the balance
this
sheet
unwind.
went from 4.5.
Sorry, the balance sheet of Treasuries
Fed
and
balance
mortgage-backed
sheet went
securities.
from 4.5 trillion
at the top,
and now we're down to. But I
About
guess they
4.
want to take. Now we're at 4 trillion. They want to supposedly take it to 3.5.
Supposedly, but they're going to wait and see.
But last year they told us they were going to take it from 4.5 to 2.5.
Correct. So
can you believe these guys?
Yeah. No. Yes, I can. So I know that all factors into the gold situation, but I think gold. So I guess what I'm saying is I think the cryptocurrency thing, whether you believe in blockchain or not, I try to separate those two. And I think if anything good comes out of the crypto, it'll be some type of blockchain technology that allows, maybe it's healthcare records, maybe whatever it might be, or currency exchange. But you still have the banks have to agree to do this, which has been the problem. Gold will be the place where people go this time, as opposed to the crypto. So that's why I think you're seeing a lot of volatility recently, and that's why I think you had this catch-up run up to over $1,300. Yes, I know we're back to just over $1,200 as we sit here, but so it's an interesting asset class to me.